Just breaking it momentarily, we'll come back to it because the jobs figures have just come out, the unemployment figures. We've got our business reporter Alicia Barry with us. Alicia, what's happened?
Well, Joe, on the face of it, the unemployment figures do look slightly better than expected. The unemployment rate for February, according to the Australian Bureau of Statistics, has fallen to 6.3% from a reading of 6.4%. Now, around 15,500 jobs were created in the month. 10,000 of those were full-time and 5,000 of those were part-time. So we have seen jobs creation, which did help push the unemployment rate down. But the big component that seems to have pushed the unemployment rate down is the fact that some people dropped out of the search for work. So the participation rate actually went backwards from a reading of 64.7% to 64.6%, which perhaps means that last month's January 12-year high deterred some people from searching for work, and they've dropped out of the search at this point. But on the headline, the unemployment rate has dropped, and that's pushed the Australian dollar higher. It's now back above 76 US cents at 76.13. And of course, these unemployment figures are really key for the Reserve Bank. It held off cutting interest rates in March, and many economists are thinking that there will be one or two, possibly more cuts later. But these figures probably take less of a case for an April rate cut because they are better than expected. But certainly the unemployment rate, the RBA says, hasn't peaked, so it could push higher. But this is a positive sign for a monthly reading.
And any immediate impact on the dollar?
The dollar has risen. It's up around a quarter of a percent against the greenback, if you like, a few cents. So it's back above 76 to 76.14 US cents, but that's still around a 6-year low.
Which, and about where the Reserve wants it.
The Reserve Bank has targeted 75 cents, but economists say it wouldn't mind if it was lower than that, and we may see it head towards 70 by the end of this year.
Okay, Alicia, thanks for talking us through that. So just repeating that unemployment figure that's just come through, a little better than expected at 6.3%.
There it is, and it is sitting at 6.3% and a build of 15.6 thousand. So just to repeat that, 6.3% is the figure, and that's a build of 15,500 jobs. So a better figure than we had been expecting coming into us. Now, 6.3%, that is better than expected on a build of 15,500 jobs. Importantly, that would perhaps just take some wind out of the sails of those who are pricing in perhaps even next month for a rate cut. It's probably more the case that May still looks the likelihood. The dollar was at about 76.3. That has bounced on this. It's got up to about 76.13, as you might well expect. It's also worth having a look, Selena, at the snapshot on how we have been travelling. A good little graphic for you there this morning, if we can animate into this one full screen, just to show, if anything, even from last year. You think the world's changed a lot? Look at that last bit of orange, the straps covering it up. But that was all the jobs created through 2014, and that was about 200,000. So compare it with the GFC, middle of screen, around about 0809, where we really were half that figure. And we are now with rates, Selena, at levels not seen since the GFC. So that puts something of those figures into context for you. Less of a reason to cut next month. Probably May, though, still looking a likelihood. Okay, full-time jobs as well, just before I leave you on that. We've got a build of about 10.3 thousand, so that's as well encouraging. That's more certainty. That is, of course, therefore, more likely to benefit the broader economy.
Better result than we expected.
Yeah, exactly.
Okay, Carson Scott there.